What's up, guys? Had a great day in the markets today. Hope everyone had found some success. And today I was able to make $6,360 in profit trading TQQQ options. And here's some details of the batches that I traded with. Okay, I actually traded overall twice today, once in the morning and then another one in late morning, and I'll show you that in a moment. But for the last 7 days, a week, I'm up 11,438. But today, nonetheless, let's get into how I made that money so you can make some money for yourself. Okay, what we have here is the 1 minute. Look along the bottom here. This is my trading screen, by the way, an example of my trading screen every day. The 1 minute, 5 minute, 30 minute, 65 minute. Okay. Now, the 5 minute right here is what I make all decisions from, buy or sell. Okay. All of it is on the 5 minute. The 1 minute, 30, and the 65 are just reference points. Okay, and I'll show you what I mean by that. So let's zoom on in to the 5 minute chart. Oh, this is basically what it looked like today. Some what is that, signposts, if you will. The red lines, the curling red line is the 50 exponential moving average. The gray line is the 20 simple moving average. The green line, let me zoom out a little bit so you can see, the green line is actually, for example, last week's resistance line right here. This is the green line, right? You remember how last week, sorry, it was choppy, right? We were chopping in a zone. And the red line is the bottom of the support line of last week. Okay, we didn't finally break out of that green resistance line until Friday, end of day. We finally broke out of there and held up there, which is the key. Okay, so back to the 5 minute chart. That's what the green line is. This black line is another, we'll call it resistance line. It's actually on a daily. I actually drew that black line like a couple months ago when I was drawing out the support and resistance lines on using the daily chart. Okay, now this 30-minute EMA 50, this red line, I drew that into the chart and I took it from here. Okay, this is the 30-minute chart right here. I took it from right there. This is the 60-minute EMA line, and I took that. Here, let me zoom in so you can just see it more clearly. Here's the 30-minute right there. See that? That's where I took it from. And this is the 60-minute right there. That's where I got it from. Okay? Because I'm going to show you some uncanny correlation between what I've just described. Okay. At opening bell, we basically went down. Okay, so this is the 5 minute chart. Okay, this is the 5 minute chart. Down, basically, and touched last week's resistance green line, bounced off of that, came up to the convergence of the 5-minute EMA 50 line and the 5-minute SMA 20 line. See that? It converged, came up to failed, and I want to emphasize this point. Well, how do you know it failed? On the 5-minute chart, the body of the candle failed to close above the red EMA 50 line. That is critical to understand. The body of the candle. I'm not including the wicks. I'm only talking about the body. The body of the candle must close above the EMA line in order for it to be considered bullish. Okay, so since this is a 5-minute chart, you must actually sit there and twiddle your thumbs for 5 minutes. You must give the candle time to declare its position by closing either above, through, or below the EMA line. Okay, that is critical, critical, critical. As you see here, see, this is why I use the 5 minute way more than the 1 minute. The 1 minute, you got all kinds of candles, many of them closing above and below, above and below, above and below. It's too much interference. Let's smooth out the interference there and only represent it as one candle, and that would be somewhere in here. See, because if you looked at the 1 minute, you're like, oh, but look, the 1 minute candles are closing above. Yeah, but overall, when you wrap them up into the 5 minute, they're not closing above. That is key. This is absolutely a critical point that I use in decision making. Okay, because you could easily get head faked when you're just looking at this, look up, down, up, down, up, down. You could easily get head faked. Oh, I'm gonna make a call. Look at that. Look at that big old candle. Look at this. It's going up, only to fall. See that? Only to fall. Okay, this is critical. The body of the 5 minute candle must close above. The body must close above the 50 EMA on the 5 minute chart. If it straddles it like this red candle's doing, like this one right here, if it's straddling it, nope, it's gonna fail. It's gonna fall. If the bottom of the candle body touches the red EMA line, you've got a puncher's chance. You've got a chance. What I would say is let the next candle declare its position. Let the following wait another 5 minutes. Okay? It will save you tons of money, I promise you. Wait 5 minutes. Let the next candle. Let me see if I can give you an example. Here we go. Yeah, this is a good one. The body touches the red. Just wait. You see? This body is going through, straddling the line. I would wait. You, at this point, so this is 5 minutes, that's 10 minutes. See, you're just sitting there, you're just waiting, like 10 minutes. But then, because even at this point, you're like, ooh, is it going to go down or up? You don't know. You have to wait for confirmation. But if you'd waited, so now, look at this big old green candle, like, whoa. Good things come to those who wait. You would have been 15 minutes in. See, this is 5, 10, 15. 15 minutes in. But you know that's the right call because, oh, look at that. It bounced off. It's back testing. Look at that. Look at the wicks. Look at the wicks. But the bodies are closing above the red EMA. Boom. It's off to the races. See what I mean? The key is the body of the candle. Must close. Okay. Anyways, onward and upward. Now, look at the fall this morning. Look at the fall. Look at the fall. How did I know? Notice how it's falling, 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 and it tries to come up and retrace right here, which is what? See that? It's falling and it's retracing. This was the 30-minute EMA. This was that point. This point right here that it tried to retrace to coincided exactly this morning with that point right there. I promise you it did. It did. Even though right now you can't tell because the candle, this is at the end of the day when I took the screenshot, the candle's already declared itself. But what happened was it came down, retraced, only to fail. See that? The body is straddling the 30-minute EMA 50 line. It's going to fail. You know immediately it's going to fail. You can just sit there and watch it, right? This is a 5-minute candle. You just sit there for 5 minutes. You're watching it. You're watching it. You're watching it like, oh, it's not going to make it. It's not going to make it. You're like, you've got a minute to go, and you're way down there at the bottom. You're not going to make it. That's how you know, I'm not going to place a call at that time. Okay, see that? So came back up, retraced, failed, and how did I know? Well, this is the 60 EMA 50. Look at that. It bounced off it perfectly. Look at the wick. That's when you know, when you see that bottom wick, you're like, ah, it found support. It found it. Because, look at this. Follow this. Look at the blue arrow. Look at that beauty. Look at that. That wick perfectly touched the 65-minute EMA 50. Perfectly, and just bounced off. It just bounced off that like a basketball. Look at that. Touched it. Boop, up. And look at this. Look where it's going. It came up and touched last week's resistance line, the green line. Remember that? Back tested down back to the 30-minute EMA 50. Look at that. And wicked perfectly. Closed candles above it and bounced right back up. I mean, look at the precision of this pattern. You cannot script it better than that. I mean, just hands down, full stop. Look at that. Everywhere it went to, pivoted from, bounced off of, back tested from, bounced off of, can be explained. Every single location. Look at this. Bounced off the 30, right? Full bodies are closing above the line. That's a bullish sign. It bounced up, came up, came up right back to the 5-minute EMA 50. Look at that. Up, 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 up. Back test back down. Here you have a closing candle with long wick. A closing candle above the EMA 50. These two here, let me zoom in. These two candles, that's a little bit iffy. I would have waited. I'm like, let's give it a little bit more time. So we're talking about 20 minutes here, guys. Look, if we start counting from this candle, 5, 10, 15, 20, getting into the 25th minute. So you're just sitting there and you're waiting. The reason why you must wait for confirmation, period, full stop. The candles must close above those EMA 50 lines, full stop. You have to wait for the pattern to form. Do not force a trade, or you will be sorry if you force that trade before getting confirmation. Okay? See, here's another example. It bounced off the EMA 50, right, on the 5-minute chart. It just rallied up to the resistance point. And it failed at the resistance. Why? Because the bodies failed to close above the resistance line. It failed. It failed once, tried it again, failed twice, down you go. But what it's trying to do is this downward leg is not that it's going to fall and crash. And the answer is you know that because the MACD, and I'm going to show you that in a minute. The MACD is going to tell you, oh no, it's not going to crash. It's just pulling back. It's pulling back because it already got rejected twice. It's pulling back because it needs to build the energy to go for the third time. Third time's a charm, right? And see, look at this. Look at that. Look at that beauty. Now this candle closed above the resistance line. That's when you know, oh, it's off to the races now. It's on. It's game on now. Whereas the previous two attempts, nope, nope. The bodies did not close above it. The bodies straddled the line. That's bad. That's a bad sign. Okay? Straddling the line or most definitely closing below the line altogether. That's bad. Okay? So that's what I wanted to show you. Now, earlier I talked about the MACD. Here it is. Here, let me zoom out. All of these blue dotted lines I drew in there, see that? For the 1 minute, 5 minute, 30 minute, 65 minute. Okay, the MACD. I have a different take on this compared to a lot of stocks channels that I see. People talk about, oh, well, if the red MACD crosses over the the signal line, the green signal line, that's bullish, or that's bearish, or if the histogram, which in this case I colored it gray because I don't need to see the green and the red histogram colors. They say, well, if half the histogram is gray, is green, but then the other half is red, that's how you know you're losing momentum. Okay, you know what? I don't even look at any of that. What I look for, I drew these blue dotted lines in intentionally. What I look for is, are both the red MACD line and the green signal line, if both are above the zero level, it's bullish. You're not gonna go down. I've never seen an exception to that yet. Okay. In this case, this is the 5-minute MACD. The whole day it stayed above zero. You will not go down. Okay, let's check this out. This is a 30-minute. Look at this. Look at this bad boy. This is Friday, by the way. So this is Friday. That was huge up day, right? But look at today. It was coming. This is pre-market. It's shaded. Although it was coming down, it made no difference. It's above the zero line. You're not going to fall. Period. Hands down. This is the 30-minute. Let's check out the 65-minute MACD. So this is today. Look at it. Look at this. All day, not only did it not go down, it's way above the zero line and it's curling up. That's the 65-minute chart. It's curling up. Okay? That gives you all the confidence like, oh no, 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 no. I'm not putting any puts today. We are staying up. In fact, this pattern on the 65-minute, ooh, that looks mean. We might have another update tomorrow too, but I don't want to jump that gun. I need to look at the pre-markets in the morning to confirm. Stuff happens overnight. You never know. But this just looks mean. I'll just say badass bullish. It just looks bullish. I mean, look at that. This was Friday, right? Both lines were just going up and up and up and up and up, right? The green, the signal line, and the MACD line. But today, it's starting to curl up again. Look at that. That's undeniable. Let's compare that to Thursday. Okay, let me zoom out a little bit. Remember Thursday? It was a big gap and crap. Yeah, that's because it gapped up. It came up only to fall down past below the zero line. Look at that. Below. Bye. Lights out. You're gone. That's what happened. That's why Thursday it risked going down because the MACD line went down past below the zero line. But come Friday, oh, rock and roll time. Boom! It just stayed up above the zero line the whole day, moving further and further away from it on Friday. And today it stayed up there. Even see, this is a 65-minute. And in fact, it's curling up. Despite this morning's downward trend, right? So, oops. No, I don't want to show you that. That's VIX. Ah, oh, that's interesting. Okay, hold on a second. DQQQ. I don't know what happened there, but anyways, I'm gonna show you this again. That was kind of strange, but nonetheless, okay. Okay, now, okay, that's what I wanted to show you. Notice I didn't even talk about the 1-minute time frame because again, there's just so much noise, and I keep it up for more informational. But I do not make decisions based on the 1-minute at all. I mean, I might make a decision here on this bullish divergence, you know, that I think it's going to bottom. Okay, I might do that, but in general, you know, here's the MACD moving. Still talking about that. Look at that. Like I don't care if the red is crossing over or crossing below. See, crossing below the green signal line here. See that? It's crossing below it. Like, who cares? It's above zero. It's not going to fall. It's just going to dip. It's not going to fall. It's only when, yeah, you want to see a fall. Here's a fall. Like right here. Here, let me zoom in. Wednesday and Thursday. Wednesday, what happened? Yeah, you went down below the zero line. Yeah, you fell, didn't you? Yeah, you sure did. And look at Thursday. You came up and then you fell below the zero line. Yeah, you sure went down, didn't you? See? That's how you know what the market is possibly going to do. It's like, no, this is not going to fall today, especially not on a day like today. Oh, no, you're not. No, you're not. So, okay. Now, I want to call out a couple more things. Look at this is the rate of change. This is the Chaikin Money Flow. And down here is the RSI, Relative Strength Index. Look at the bullish divergences here. Up, 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 when that was going down. That's how you know. That can give you confidence. We are approaching a bottom. And in this case, today, that bottom was the 60-minute EMA 50 that we talked about earlier. Okay? Got it? I mean, again, you just look at this pattern, could not have been scripted any other way. It followed these indicators perfectly. You can perfectly predict what it was going to do with the confidence that, no, it's not going to crash on us today. Nope, because the MACD is way above zero. We're going to play it to the upside. That's why I bought, oh, by the way, I don't think I ever explained. I bought my entry points today were here and here. Here, because according to my trading rules, I need to see it come up, back test, close candle bodies above the EMA, and then go up. As soon as I saw this green candle start to go up, green, 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 when I already saw two previous red candles, bodies close above the EMA, I was like, oh, that's it. Call, call, make the call. Get your call options out. Let's rock and roll. Okay. The reason why I bought here, I bought the second batch here, I wanted to know how high this was going to go, right? It could have stopped here. You see what I mean? Like, I want to know how high it's going to go. And I'm going to wait for the pullback to test the 5-minute EMA 50. And then when I saw this, call. Okay. You know, you could have, I could have bought calls here. Okay, that's fine. But again, I wanted to know how high it was going to go. Well, I got my answer. It went up here. It's like, okay. I'm going to wait for the back test, and then I'm going to call right there. Oop, made some more money. Okay. All the while, the MACD was supporting your decision to make calls. It's like, no, we're not going to crash today. Nope, it's not going to collapse on us today like it did on Thursday, last Thursday, like it did last Wednesday. It collapsed. But that's because the MACD went down below zero. Okay. All right. Now, quickly, let's look at UVXY. That'll get you out of here. VIX. UVXY, the proxy for VIX. Okay, long story short on VIX. What you're not going to find in other stocks channels is VIX is struggling to break through its 65-minute EMA 50 line. How do I know that? Check it out. To the far right-hand corner, here is the 65-minute EMA 50 line, the red line. It just can't break past it. It just can't do it. Okay? That's where the blue arrow is pointing to, right the line. See that? You're not going to see any other stocks channels point that out. The 65-minute EMA is a resistance line for VIX right now. It's been that way for a while, actually. believe it or not. Now, let's point to those earlier principles. This is the 5 minute, chart, but I drew in the red line from the 65-minute just for, I just want to know where am I relative to the larger time frame. So I drew that line in there. Look at that. Also on the 5 minute, VIX this morning shot up, back tested. It tried to come back up, but failed the back test right here at this moment. At this moment, right here. Because that 5 minute candle closed straddling the 65-minute EMA line. Right there. That's the moment of failure. That's when I thought, oh, nope, you're going down, VIX. You're going down. You failed the back test. Okay? That's what caused this. Yeah, this was the wick. This is the big long wick. Okay? when it failed. Now, but so you could just watch the. Okay, look at this. Look at this. Look where it bounced off of. Lo and behold, it bounced off of the 5 minute EMA 50 line. Look at that. Boop. It tried to come up, and look at that. Now the 65-minute EMA acts as resistance because the 5 minute candles could not close above it. You went up, failed, straddled the gray simple moving average 20 line. Look at that. You're straddling, fall below the 5 minute EMA 50 line right here. Now you're kind of straddling it, but then you tried to break out above it, but on the back test, failed to close candles above it, and that's why you are going down, my friend. So it is the same analysis over and over and over again, right? You got to close candle bodies above or below either the EMA line, the support resistance line, or the simple moving average SMA 20 line. You must close candles, especially on the back test, like in this example, especially on a back test. Otherwise, you're going down more. Period. Hands down. And that's exactly what VIX did all day long. Look at that. It just couldn't. It couldn't buy a. Oh, what's that? Who wants to be a millionaire? It couldn't buy a lifeline. Okay. See, it tried to come up and hug the SMA 20, and no, I don't think so. You're going down. Okay. So everything that I've showed you here today, if you think about it, all pivot points, resistance points, the EMA 50 lines, SMA 20 lines, all of them, every single one of them proved to be pivot points for the candles. Almost like you can predict exactly where it's going to go. And that's what makes it fun, right? I mean, that's just fantastic. Okay. So so I will end with that. If you want to follow me on Twitter, uh, every morning I do pre-market outlook on what I see in the futures market. Okay, if you want an idea of how the day is going to go, I send tweets out there. I'm going to try to, if I have time, to do pre-market YouTube videos, but it depends on the day. Sometimes I do, sometimes I don't. But I should have time to throw tweets out there because that doesn't take as much time to prepare for. Okay. And if you like the content, please give it a like, share, subscribe, or notify. And I will talk to you again tomorrow.